Well, it was exactly 24 hours ago. We were joined by our financial consultant, Reagan, talking about the tariffs just announced, its effects on stocks.
Let's bring him back in. Okay, Rick, there you are. You've now had some time to digest all of this news and the tariffs and what happened to the markets today. What really stands out to you?
By the way, we've got to stop meeting like this.
Yeah,
under bad circumstances, for sure.
Never good news. But honestly, what stood out to me is I'm surprised that the stock market didn't drop more than it did. In analyzing the new tariffs, they are severe. I mean, take China, for example. When you put the extra 34% on China that they announced yesterday, on top of the 20% that we had before, it's over 50% extra tariff on China. That's one of our biggest trading partners. We bring a lot in from China, and then 50% more, that's just a huge number. And a lot of people think the Chinese government pays the tariff. That's not the case. It's the company that is importing the product from China. So they likely are going to have to absorb some of that cost and take a cut to their profits. Lower profits, not good for the stock market, but we're pretty sure they're not going to take all of that. Some of that's going to get passed to consumers, and that's going to mean higher prices out there for consumers. So you've got corporations making less money, you got higher prices for consumers. That significantly increases the odds of recession. I hate to say that. I didn't think we had much of a chance of recession this year. It's significantly higher right now. And what's important is if prices are going up, the Fed's going to have a tough time helping us if we go into a recession. So again, can't believe I'm saying it, but I'm happy to get out of the stock market where it ended today.
Did you say you're surprised the markets didn't sell off more, and how far could they drop?
Yeah, I would say, Christy, if we don't see any progress, any move on negotiations with other countries, I think it's a good possibility we can go 20% more or down in the market. But the markets are hopeful. I think it's one of the reasons we stayed up here. They are hopeful that there can be some negotiation out there.
Yeah, Rick, though there really been no signals that the administration's even looking at any kind of compromise or any deals with any of these countries. So what indications are there that you think there might actually be something in the works, or eventually?
All right, breaking good news for you, Jeff. About a half an hour ago, the president did come out with a comment saying that he would be open to negotiations if a country has a really phenomenal deal for him. But that was the first sign we saw of the door cracking open there. But one of the reasons I think they're going to negotiate, or I'm hoping they will, the 10% extra tariffs on everybody, that kicks in this Saturday. But that extra tariff, the really painful stuff, not until next Wednesday. So I think they've got that. There's a window to open up and start negotiations. And at least I think that's where the market's hanging its hat on.
All right, we got to get this question. And what about 401k participants? Should they change how they're investing? Should they pull back until things are clearer?
No. As a matter of fact, if you've got four or five or more years until retirement, it may be painful. You want to keep buying here, Christy, because you're now buying at a pretty big discount. The worst thing you can do if you're in a 401k right now is to stop buying.
All right, Rick, we got time for one more. And I know you joke about this. We always have you on with bad news. I mean, leave us with something positive to look forward to.
I know it seems tough today, but there is actually some positive stuff. What's created by man can be solved by man. Well, we created the tariffs, and they too can be negotiated and solved. So if we saw just a little movement in tariffs, that would be a really positive sign. And by the way, that's why you don't go to cash right now and wait, because if there is some movement on tariffs, I think you can see the market rip higher. So you've got that out there. You've got the fact that corporations are in really good shape. If ever they could withstand absorbing some tariffs, it's right now. And then finally, I think if we get this tariff behind us, second half of the year, the administration is going to be talking about deregulation out there, and they're going to be talking about extending tax cuts. That's always all very good for the market. But as long as we see no movement on this tariffs, it's going to be really tough on the markets.
Reagan, thank you for joining us. And I have a feeling we're going to see you again real soon.
Take care.